All right. Good afternoon, dear ladies and gentlemen. Thanks for joining another interesting session at the Digital Innovation Pavilion. So today we are gonna talk about a very important topic, which you know is is crucial for the climate change mitigation and attainment of the Paris Agreement goals. We had a lot of discussions here, and most of them really point at one important problem that we all need to somehow solve. And the problem is, how do we finance early stage climate projects? Because there are lots of investors who are ready to deploy capital, there are off-takers who are actively participating in this movement, but most of them want to have the projects that already have everything. They got all the accreditations, they got the offtake agreements, they got insurance, they got amazing GIS analysis from every angle. They have digital twins and everything, structured data. And these are really big guys, but the problem is not this. The problem is, how do we transform project ideas? How do we transform community projects into investable assets? And we need to bridge this chasm between the idea stage and the project that has already succeeded. And so together we're gonna talk about this important topic at this panel. I have very wonderful speakers joining us both offline and online. We have representatives of the investment circles. We have very interesting projects. We also have solution providers that are all part of this journey. And I think it would be great to start with some of the projects that are joining us online to better understand what are the problems that they face, and maybe that they tell a little bit about themselves, introduce their projects, with a focus maybe on Brazil, of course, since we're here. Maybe we can have a quick round, starting with projects, starting with a short introduction about the company, the project, and maybe some of the challenges that the projects are facing in terms of finding their first financing. So maybe we can start with Sergey, who is a founder and chief strategy officer of Linger. They are a great project developer doing projects in South America, Southeast Asia, and Africa. Great experience focusing on blue carbon. And I'm happy to give the floor to Sergey. Hello, Sergey.
Hello, can you hear me? No.
Sergey, are you with us?
Yes, can you hear me? Hello.
Hello?
Hello, hello.
Hello, Sergey. We can hear you well now. Can you
All
hear
right.
us?
Yes, I can hear you well. I can see you.
Sorry, the connection is still not perfect.
All right. Okay.
We're experiencing some technical.
Mm. The Brazil is lagging. Seems like.
Sergey, are you with us?
I hope so. I hope so. Can you hear me?
Yeah, so we can hear you now. You're back online. I was just announcing our panel structure, and we want to explore the problems that early stage climate projects, nature-based projects face in finding their first financing. So we're starting with project developers. You're the first to start. We want you to quickly describe your organization, some of the projects that you're doing, maybe with a focus on Brazil, and list us some of the challenges that you're facing. And we're going to try and solve them today.
Great. I will try to. Hope my connection will work. Hey, greetings, everyone. Unfortunately, I'm not in Brazil, but from online. Can you share my? Can I be able to share my screen?
Yes, we can hear you.
Would you be able to see my screen? Because I have some videos to you.
We can't see your screen yet, but we're working on this. Yes, we can see your screen.
Okay, so let me guide you through the early stage financing of the mangrove restoration projects, which I'm involved in the last 6 years, and I'm a big fan of mangroves. And actually, if you look at the global efforts to restore mangroves, like really, it's going too risky and too slow globally. So half of the projects they fail on the way. And especially if they rely on mass tree planting, the failure rates, is 70 to 80%. A lot of this is due to the kind of poor planning, poor, selection of species and zoning, and bad planting materials, lack of experience in planting, lack of hydrology alteration, lack of caretaking. Most of these efforts, a lot of them are funded by the philanthropic capital, which is typically, very impactful and upfront, but is not continuous. So you cannot have a philanthropic funding for many years, typically 2-3 years, and this creates lack of long-term incentives to replant and protect the forests, and in principle does not remove the anthropogenic pressure, which in most cases is the cause of degradation. Much better choice would be carbon finance, because carbon is exactly aligning incentives. When the trees stay in the ground, when they grow, sequester carbon, this is measured and then is translated into carbon credits, which are sold as basically outcomes of the of the sequestration of carbon and biodiversity and community benefits. But those markets are very, very complex, and the majority of the restoration groups, NGOs, companies, they don't have capabilities to access these complex markets. So Vlinder is the company which actually I founded. Is the commercial project development company. So we're focusing only on mangrove projects since 2020. And the main revenue model is actually we develop community-based projects together with communities, certify them on standards like now it's Verra, and then offer credits to the companies that they meet their climate goals, voluntary climate goals. And we kind of tested different things which works and which also sometimes don't work. And this is some kind of clear distinctions, like we learn that community is front and center and is super important. It's not like just a empty words. It's really you have to make them a partner, kind of a co-design, co-owner of the project, because then a lot of this is not just a forest and tree planting. It is the system of social and nature. You have to realize what is the conflict between them. You have to remove and pressure from the people to the forest over harvesting. Basically they do it for livelihoods. They need fuel wood, and they need, they do sometimes charcoal production over harvesting and so on. For that, you also need to design a fair and transparent benefit sharing, so they're properly involved, incentivized, feel the fair participation. Like, just to give you an example, in Kenya, it's also mandated by the law to share 40% of net revenue. Sometimes it's 50% up to that for local communities and more. In terms of the approach, it has to be not just purely top-down, Western type of science, but also you have to carefully integrate with the local knowledge. There are local scientists, but also there are local people who have some experience in restoration. Like, they know better way to get the proper gills that they survive better. So this is like, it have to be carefully managed together. Then you could also combine, of course, the fancy tech like satellite, remote sensing, drones, but also you need to go on the ground. You need to be there. You need to understand the situation there. And finally, and this is what I think the main topic of this panel is, like, what does it mean to be investor ready? What's investable? And it has to be, actually, it's a continuous process. It's never like things done. So it's quality of data, and it has to be actually DD-able, like investable, so that it has to pass through various checks and requirements. And so we have to start actually almost like from day one to build this data room that is actually becomes your product for us, suitable for concessional and ideally commercial capital, which has a certain threshold. Quickly about the waterfall, like, what's the stages of the project? You start with year 1, year 2 feasibility stage, where you would focus on land tenures, carbon regulations, community engagement, signing FPICs, basically build the case from the economics perspective. Will economics work in this project from, let's say, carbon growth, carbon sink rates, the cost of restoration, the necessary sharing you have to design. So this phase is not expensive, but it's like almost like from $500,000 to $1 million, which is very high risk investment. Normally it's covered by us as developers, or we could find some donors, maybe some grants or refundable grants for environmental organizations, but it's the highest risk stage. As soon as it's passed, so the project is basically already financeable, so the economics works. Then you go for and find project investors, which will finance the capex, and capex is typically from $2,000 to $2,500 per hectare of restored revegetated mangroves. Mostly that is the cost of seedlings, nurseries, and labor, but also some overheads like moving people by the boat to the restoration sites and so on. So that's like if you think of the 1,000 hectare typical project, there's $2.5 million investment needed up front. So, and you have to restore areas, you have to monitor survival, then replant if something has died, and then also pay for certification. So full Verra process validation and listing on the registry. Finally, as soon as trees are planted, hopefully they all survived, or 70% at least survived, and then you can replant. Then you start monitoring initial credits. That can take up to 40 years or longer. Now we try to follow the 40-year rule because it's what the CCP requirements are. And this is like normally a flat kind of cost per year, because you have to just pay for monitoring, verification, scouting to protect the trees, some livelihood programs, benefit sharing. So it's all covered by the sort of OPEX costs and all the additional costs and benefit sharing. And this is normally funded by the project revenue itself. So carbon credits are generated, they are sold and cover the OPEX. Finally, after year 40, you have to have certain permanence guarantees. So there should be some form of conservation or protection area. normally managed already not by us as developers, by the government and communities. So how the underlying kind of value creation works, you have those carbon curve, which is normally consists of the soil sink. So the mangroves are typically good at storing carbon, but when it's degraded, they start to accumulate more carbon in the soil, which was degraded, and you have those roughly 5 to 7 tons per hectare per year of CO2 stored by soil. But then the rest is basically the biomass. So the trees will grow with this kind of hump curve. So first maybe 10 tons a year, then at year 10 like 20 tons, and stay at 20 tons plus on average, and then will kind of diminish. And this is the carbon curve, which is you can first validate and then verify by measuring the actual growth of the trees and the soil sequestration. And then you go and issue this on the registry. The registry will take a non-permanence buffer from 12 to 24% or more, depending on the risks that the project face for the reversal. Like here, for example, it's like 20% modeled. And then the rest of the thing you have to factor to share with the investor into the capex. And typically we share 40 to 50% of the carbon revenue, carbon stream to the investor to repay the capex investment. And the rest basically goes to the project and then shared by the waterfall to the OPEX, and then as a net revenue shared to communities and stakeholders locally, country, municipal government, maybe forest service, and the rest to the developer. And this curve actually I modeled today in the morning, like how to just to illustrate the return profile of the capex investment. So if you invest, let's say, 2 million into the 1,000 hectare project, what will be the return per year in percent of this 2 million? So if you and of course it will depend on the carbon price. But if the carbon price, let's say, is at $40 as it is now for high quality projects, then the project will return from like 10%, let's say, per year in the year 5, and then around 20% starting from year 10 to year 30. So this is like good performing asset, but only starting from year 10 basically. But the first decade is a bit shallow. And if you then calculate what will be the IRR, the internal rate of return of such an investment, depending on the duration of the investment, then you can also build those kind of those curves. Like for example, for the $40 per ton average price in the future, the break-even will be around year 10, and then the IRR will grow to maybe 10% in year 20. And then if you stay longer, so you have a long-term sharing contract, it will be maybe around 12%. So this is like the profitability based on the forward price curve. Of course, we want the prices to grow, and if you want more capital to come in, we have to offer decent returns. For example, like 15% IRR is if in the price is 60, then it's possible to have 15% IRR for such projects. There is plenty of funding vehicles, different structures. Normally, it's you can like use typically prepaid offtakes when you have a stream which is already validated. You can offer it with partial or full prepayment for the directly to the end buyer or to the intermediary, and they normally will request your replacement guarantee or some form of insurance of delivery. But this is, I guess, what is best practice here. Streaming deals. We'll have streaming deals because it's a prepayment for the future stream, so it's a percentage of the carbon curve. And if the carbon curve fluctuates, that also kind of shares the risks and upside with the streaming investor. They may ask for some minimum guarantee, but that is how it works. Offtakes plus financing, and this is currently getting popular. So you first get an offtake from a company, like 5-10 year offtake from company, tech company or consulting company, which just procures high quality carbon credits. But with this offtake, you can go and finance it either by the debt or the revenue sharing, upside sharing schemes. And obviously, there's a big role of these platforms, tech platforms, which I'm a big fan of, Evercity and what the guys are doing. So we'll try to also feature our Kenya projects and Brazil projects in this platform, because this is one of the way to show the quality of the project with all the data room, plus get a very transparent binding terms of like the forward stream, which can be procured by a group of investors or one investor, which then in return finance the whole kind of project implementation. And so this is the quite fascinating because it can be combined with a digital MRV and data collection process almost in real time. So really new frontier. And so finally, my message would be probably just it's a no-brainer to do this mangrove restoration because it's attractive financial return profile, 12-15% IRR in US dollars. So it's a kind of, even given the risk of the projects is still very attractive. Then $1 invested in mangroves restoration can generate $6 to $20 a year in ecosystem services. So it's coastal protection, like fish, yield gains and soil erosion protection. Like it's many functions the mangroves play in the coastal ecosystem. So it's $15,000 to $50,000 per hectare of the ecosystem services, just basically the nature provides. And we have around almost 800,000 available for restoration, which were degraded previously by clear cut or by some natural disasters. That's available for restoration globally, almost 1 million hectares. And there is on the other side, there's demand. So 11,000 companies is BTI aligned in the new standard of beyond value chain mitigation, which will kind of mandate the carbon removal usage. So really, the demand is there, the potential is there. So we need to go and restore more mangrove forests, hopefully with smart finance. So thank you very much, and happy to speak and answer questions. Now, Alexey, we cannot hear you. Then there's no sound, unfortunately.
That's really just showed us. Really very deep. Didn't expect that from a project. So looks like an investment grade overview of the market. So thank you very much, Sergey. That was like unexpected, but it was a very nice surprise. And I think it has really set the discussion really well. But maybe before we jump to the next project online, we can set the technicalities there. Maybe we can have some thoughts by diversity team member, Benoit Clément, who used to work in Vera, leading the innovation topic there. I know that Benoit, we've been discussing at different conferences, AITA, the topic of early stage financing. So maybe putting your Vera back in the hindsight, you can tell us a bit about your views on the early stage project financing and how regulators and standards look at that. Thanks.
Okay, I think you guys can hear me. Yeah, working at Vera, my focus as their director of financial innovation for 3 years was I had a big mandate focused on how to accelerate project finance for early stage projects. For a moment, we were even researching developing our own early stage financial instrument called the Projectile Carbon Unit. Ultimately, that didn't come to fruition for a couple of different reasons, but we were looking at other analogous products in the market that were working towards solving this issue of bringing capital to early stage projects. During this time, we did a lot of product discovery, a bunch of market and user research, met with lots of project developers, financiers, traders, brokers. I spent a week on the London Canary Wharf interviewing all the carbon teams of the banks and trying to understand what are the difficulties between moving money between these different parties. And what we saw there that there were definitely issues around technical expertise for project developers, sometimes also on the capital provider side. But fundamentally, there was just also this lack of standardization across the markets when it comes to standardizing project data, when it comes to standards across methodologies, standards on quality, and these different issues. You're working with a really fragmented ecosystem, and it's hard trying to speak different languages of all the different standards and methodologies. And every time you're analyzing a new project, you have to kind of reinterpret a whole new different financial model structure. And this is something that we've been working at Evercity, is figuring out how do we start to break some of those issues by delivering on some key solutions. Yeah, I'll pause there. We're going to work on this answer together. Yeah.
All right, thanks, Benoit. We'll come back to you for sure. So maybe Marco from Biofix can also highlight a couple of challenges that Biofix is facing in terms of early stage financing. And since we're a bit running out of time, maybe we can limit your intervention to the first one. We'll give you the opportunity to speak more about your projects next. Maybe like 3 to 4 minutes, speaking about the challenges you're facing in finance. We quickly introduce the company. Thanks.
Thank you, Alexi and Evercity for inviting me. Can you hear me well there?
Yes, we can hear you well.
Okay, I will just share a little bit presentation. Please let me see if you are watching my screen, my presentation.
Yes, we can see.
So I will talk today about financial nature-based solutions, turning ambition into a bankable impact, and what are the main challenges that, as from the project developer view, we are facing on this matter. So first of all, again, Alexi and Evercity for this convenience and crucial conversation. At Biofix, we have been working more than a decade implementing, formulating, designing, and financing MBAs across Latin America, from the Andes to the Amazon region, in Colombia, in Brazil. We already delivered more than 20 million credits. We are strong working right now in ARR projects in the Amazon region. Our experience shows that the ideas and commitment are not the problem. The real challenge right now are in financing the transition from the concept to impact, right? This is what I call the value of data for early stage MBAs, a space where promising projects struggle to attract capital and investment because they are seen as high risk projects and low return projects. So this is the huge challenge that we are facing right now. How we can overcome this issue? So first of all, we need to bridging the financial value of debt. We must addressing this structural gap with mechanisms that build confidence, scalability, and the value recognition of MBA's projects. How can we do that? We need to move in from the concept to a bankable project. Right? We know that this requires investment in early design, in early stage, and phases like environmental baselines. Community engagement is quite important from the very beginning, and governance, of course, the governance with indigenous and communities. This phase is costly and rarely funded. So we need to dedicate incubation facilities and early stage funds to catalyze this transition from concept nodes to really investable portfolios. And the second point is that we must de-risk the early stage capital through fear loss tranche, guarantees, and result-based grant. These tools, these kind of tools, I think that could reduce the investor hesitation and can be particularly powerful in regions like the Amazon region, where both ecological and political risks are perceived as really high, right? And the third one is that the blended finance structure. This structure allow us to align public sector, private sector, philanthropic sector, As Biofix, we are structuring vehicles that where concessional structuring provides this stability. The second part that to escalate early stage MBAs in an early stage is monetizing the co-benefits. So as you know, MBAs deliver much more than carbon. They generate biodiversity protection, water security, soil regeneration, and community resilience. So the challenge is to translate these co-benefits into a real market value. How can we do that? We need to robust science-based valuation frameworks that quantify the ecosystem services like flow regulation, pollination, among others. The second point is where we need to scale and accelerate the investment in emerging mechanisms as biodiversity credits, payment for ecosystem service, and resilience-linked bonds like blue bonds or climate bonds that could create an extra income and make projects more resilient to market fluctuations. And the third one about this matter is that the private sector is increase the corporate and natural capital commitments of the private sector. We know that the private sector is under growing pressure to meet science-based nature targets and transparency in their supply chain and sustainability goals. So by linking MBAs directly with these commitments, we can unlock the long-term financing from corporate sustainability budgets to structured capital flows to MBAs. And last but not least, many key point is channeling or addressing the finance to directly to indigenous people and local communities. So we cannot talk about financing MBS without addressing who receive and control the natural capital, who are the indigenous peoples in the world. So indigenous people and local communities are often the most effective stewards on nature, but they remain the least funded, right? So how can we improve this matter? We need to simplify and direct financing pathways to reduce transaction costs, bypass intermediaries when we were working with the indigenous communities. Local organizations should have the capacity and the trust to manage their climate finance in a direct way. In the Biofix has a huge experience working with indigenous communities. We have been working with more than 20 different organizations, indigenous organizations, and in all of our projects, Red Plus project and AR projects, we create a specific vehicle that allow to indigenous community to manage and administrate their resources. The second point is financing the bioeconomy, different bioeconomy models. So this requires invest in local enterprises, in local sustainable agriculture, non-timber products, community forestry, that generate both income and resilience. So that's a very important challenge that a project developer need to address as well. And the third point is that we need to really increase the investment in free, prior, and informed consent. Every financial instrument supporting the MBAs must, of course, uphold FPIC and land tenure rights. So this ensure equitable benefit sharing and long-term project permanence. Biofix, we strongly believe that when communities are true partners and not just merely beneficiaries of the projects, the outcomes are stronger and are more enduring, and the permanence of the projects are guaranteed when the communities are the real partners of the projects. So to close the financial gap of nature-based solutions, we must redefine how we perceive risks, values, and equity. So the goal here is not just to fund projects, right? It's to finance just inclusive and regenerative and new models that rewards those to protect the forest. In the case of Biofix, are indigenous community leaders. So that's my presentation. Thank you very much, Alexi, for your time, and to Evercity and everyone.
Thank you so much, Marco, and thanks for bringing additional perspectives into the conversation. I think we've seen a very engineered, technical, financial approach by Sergey, and you mentioned a lot about biodiversity and communities. And I think, combining, of course, these two approaches would make a really high integrity project. And I think we're ready to go now to the demand side. But before we jump to the demand side, we have our partners from Climate Aligned dialing in from London. And Natasha, an analyst from Climate Aligned, is going to show us a quick demo of the solution they built specifically for this session using their AI tools for typing, which is related to the potential of investment and sequestration of different biomes. Keep it short. Thanks.
Yes, I'll keep it short. Hi, everyone. I'm an analyst here at Climate Aligned in London. I'll try to show you briefly what this is, and I'll run through very quickly what this could be used for, and maybe spark some discussion and ideas about thinking a bit more creatively about attracting more financing to early stage nature-based solutions. So essentially here we have an interactive tool that you can interact with data set on regeneration potential in different countries worldwide. So I built this data set based off of IPCC data, FAO data, and our World Resources Institute data. And I've created an estimate that says for every country and their biomes, what potential for regeneration and sequestration there is. So we're looking at Brazil, obviously. And here we have the tropical rainforest, the Amazon. You can see that if you were to regenerate 5,000 hectares of degraded land, you would have 1 million CO2 sequestered over 20 years. But if you go to the United States, for example, you have the Great Plains, you're going to have less carbon dioxide sequestered for the same land regeneration. And here you have in the United Kingdom, where I am based currently, about half that of the Amazon rainforest. So the reason I built this tool, I can talk about how this data set is quite high level, but you can get into more depth and get more detailed data to build this as a way to reduce the levels of entry to data accessibility. But more importantly, my thought with this tool is that I think there's a high barrier to entry to understand sustainability data for the broader public. And I intentionally made this tool be fun, to be interactive, so you can see from where you live how you can regenerate in your own backyard and think about what kind of potential there is for the climate. Because I think in the sustainability space, I've seen from my experience that people I know who work in this space are very familiar with what this kind of data is and how this works. People who don't work in this field have no concept of what carbon sequestration even means and how regeneration works and how it can be a climate benefit. So I built this as a way to think about, if we have the public talking about these things, we're understanding the data better, we can use our new tools to understand that and educate the public. Because one of the most important things in nature-based solutions, and what I've seen in my experience of working in this space previously at BTG Pactual, is that we still need government policies and government support and public support in order to get nature-based solutions. It's just one fun little tool. You can be shared afterwards. You guys can play and see different biomes in different places, how carbon dioxide potential changes. Hopefully that was quick.
Thank you.
I didn't speak too fast.
And yeah, thanks for being short and showing us this interesting tool that can definitely help us engage more people and investors into restoring biodiversity. So maybe as a next step, you can add some financial data points there, like maybe around the costs of per hectare, and maybe you can collaborate with our project developers out there. We can share the data with you, and then you can calculate not only the potential, but also the costs associated with this, and maybe the potential revenues of project developers. It can serve as something that people could use and get inspired and have some sort of a threshold in mind in order to start their projects. So that's, I guess, would be our advice for you to keep innovating and maybe add more components. We're happy to connect you with our project developers so that you guys maybe can collaborate. So thanks a lot for your demo and intervention. All right.
Thanks for having me.
Yeah. Cool. So now let us talk a little bit about the demand side. And we have here a wonderful Andrea Resende from Impact Earth. And as far as I understood, Impact Earth is that very special investor that focuses on early stage nature-based projects. So maybe Andrea can tell us a few words about why did you start doing this, and what challenges do you see and how do you solve them?
Well, it's a pleasure being here with you all. Thanks for the invitation. Yeah, Impact Earth is an international investment manager of NBS funds. We are based London, São Paulo, and Belém. Our first fund is called the Amazon Biodiversity Fund, which is a $50 million fund focused on the Brazilian legal Amazon region. And yes, that is exactly this. I was hearing all my colleagues here from the panel, and yeah, that's it. We exactly, in our perspective, our team has tens of years of experience in impact investing in NBS globally and also in Brazil. And what we see is that when we talk about startups, the value of them is on that very sweet spot where the money is large enough that it doesn't fit the founders and the families anymore, but too small for the venture capital companies. And here, the tickets when we talk about NBS are very different, but we see the very lack of capital when you are pre-PDD. You remember the first presentation of the mangroves. You were saying the first bit of capital, you don't need the philanthropic capital. But the second part of the capital, when you need commercial investors, what we see in the market, even the investors that come early, they do come post-PDD. But you need a lot of investments, not just for developing the carbon project in our vision, but also for the early prototype of the project. And prototype here, I mean 1,000 hectares, maybe 2,000 hectares. Development getting certified by VERRA, for example, and having the offtake agreements. So that's when we can really attract big pockets of money. So we do invest between $1 to $5 million US per project. And we do consider ourselves on this space doing seed nature-based investment, because we normally enter in the farm amongst the first commercial investors of the project to invest. We don't invest on our partners. There needs to be construction initially in the ground and some real partners with local connections and knowledge on how to do it. But we enter to the first scaling phase so that the project can further access additional funding. And I will give 2 examples of projects we have funded in Brazil. It's important to say the fund is almost completely deployed. It's 10 years fund. We are in the last year of investment period. We have invested in 11 companies and projects. But some they really exemplify what I'm saying. We have invested, for example, in Belterra, which is a Brazilian company, was a former Unshot Prize last year finalist. And we have created one SPV, special purpose vehicle, to do their first extension in the Amazon region. And then they, of course, what they do is agroforestry. Their thing is to prove it's possible to do agroforestry at scale. So you have no better place than doing this than in Brazil. You have millions of hectares of degraded pasture land. You are one of the leading agro powerhouse in the world, and you do have a lot of restoration knowledge, especially for monocultures or compensation. So this is that easy. We have invested, of course, you do face many challenges when you are trying to do it first time at scale. But then this year they have announced a 25 million financing line from the Brazilian Development Bank, which is a great achievement. It's very difficult to get there. And they are also closing relevant off-takers of cacao with international off-takers. So this is a bit just to exemplify what we do. In conservation side, we have also done a financing of indigenous-led conservation project, 2,000 hectares, sorry, 2,000 people from different entities and 3 indigenous territories and 600,000 hectares, more or less, in Mato Grosso and Rondônia. So I could not agree more with my colleagues. And there's also a very important blended finance component in the risk and balancing the risk and return to the equation. I think I will leave my colleague for the question, but I think that's not being positioned where there's a market failure. It's not obvious. So if you do like everyone else does, it doesn't work because we end up with the traditional, I don't have pipeline issue. What we are showing here is that if you frame the risk and return and the instruments, and you don't have flexibility on also structuring the investment, you do find pipeline, and we could have invested more than we had money available. So, yeah, this is the feedback. Onward to come.
Thank you so much. Maybe we can now jump to Laia Romero, CEO of Globania. I know that you've been working with banks, asset managers, providing them the GIS solutions, and maybe you can share something from your experience, sharing with our audience, with our projects. What do they need to focus on? What do they need to communicate and expose to investors in order to get to their investment committees faster and receive the funds?
Thank you. It depends on the strategy. The important is that the investors, data providers, and service providers are going to explain their strategy. Because many of the things that I see or that I hear are the things that I hear all the time, like de-risking. How do you show everything that you are doing? So you need to explain this to your data providers or your scientific team, and then you can check language change, differentiation, judge level. So not only the fact that what is happening around your project that may affect also the benefit of the project or the revenue or the long-term engagement. So I would say that one of the things that the first thing is being very clear on what you need, because there's a lot of geospatial data, nature data, and satellite and also climate data from the past recent years, and also predictions that can be used. Then monetizing the benefits also, or diversifying revenue. So all of these things can be supported by data. And the issue not only the geospatial data, the GIS, but actually the asset managers, fund managers, promoters are most interested in is in the report. Like a very short report that says the summary of what you can interpret from the data. And this is useful for due diligence, but for insurance, for investors, for promotion. Yes, I don't know, this is and also something that was that resonated to me with standards. It's very difficult from the scientific side to standardize. Like, carbon credits are not the same in the Amazon or in the Sahel. And they are equally important. So it's very important to understand the project and be able to communicate the benefits of it to investors and what is the life cycle that where the project can benefit from. So maybe 1 year, 5 years, or 10 years is not enough, but the long-term commitment in Sahel and semi-arid regions can be super important and can have a lot of benefits and a lot of community development as we have worked together in the past. And it's completely different. Yeah, that's great.
the buyer of this data? Are these investors or projects? Many projects are not among the most often buyers. I don't know, you tell us. But how do you think is there a way to make this data, this service more accessible to the project? And who do you think should pay for this analysis?
This analysis is not super expensive. These data is available. There are platforms like Sesame that where they have a lot of data sets available, and you can buy just a bit of data for a few dollars, or I don't know, for $100, I'm sure you can buy data that is useful. So it's just to put the energy into why would someone have their own attention that is something super expensive. I co-founded this company 6 years ago. We don't have external investors. We're independent, and I can tell you it's super challenging and expensive to have this kind of expertise. You will want to build it yourself. You want to collaborate with others, academia, whoever, who's expert on this. And look at the data that you have in it. Maybe you can spend from a few hundreds to a few thousands, but this will be a great benefit for you. So it's usually setting up a little bit. It can be from the promoters or the investment bank, the development bank, but also buying this data to make sure that proposals are looking into the right things. So we better be prepared. I think that the investment is really low.
Thank you so much for this encouraging message to the project developers. Andrea, maybe going back to you, what are the 3 top things you want to see in the early stage project? Is this the GIS data? Is this engagement of indigenous communities? Like, over to you.
Yeah, this is a very good question. And we do fund such different projects that it's difficult to have one recipe. Actually, it's very working on early stage NBS. You need to go very tailor-made on each structuring, but I'll try to summarize at least restoration, and then we talk about conservation. And for conservation, when you're talking about, for example, indigenous-led project, ag essential, very strong engagement, community governance, and for example, the projects we have funded, not all of them have the carbon development in-house. Sometimes they do partner, but then when you partner, it needs also to be a very knowledgeable partner with enough data. So it's a sum of competencies, and hardly you have one organization that has it all. So you also need a very good set of complementary skills and competencies and track record, right? Especially you need a lot of, you want to avoid the talk of, on this type of sensitive project, carbon cowboys or people who are just surfing the waves. You really need people which is recognized by the locals and have strong and real relationships. And in restoration, for me, it's a totally different type of project because I always compare restoration with an infrastructure project. It's almost building a road. The amount of capex you need, the amount of technology, team mobilization. So in this case, of course, we always look at environmental and social impact to start, otherwise we don't sit on the table. So beginning of knowledge is important, but in restoration we need very strong technical skills, very strong team, and a way to fundraise also, because we are doing the first. Of course, we don't expect perfect projects, but you need to have signs that the project will be able to survive with our investment. That with the investment, they will be able to reach another level. As I said, unfortunately, I don't have the full recipe or the investment, but we do see a very growing ecosystem here in Brazil. And I hope it's also happening worldwide, and the examples here are great. You have mangroves, you have data, you have the standards. Yeah, and things are moving forward. We need, from a business perspective, to collaborate each time more to the read with standards, with data, and also a bit of blended funds, as I was mentioning, because very quickly the fund has like first loss, the fund has guarantee also, and when you do invest, we also do have a lot of flexibility on the instruments. We do invest the mentioned a few here, like a bit of carbon backed notes, revenue related debt, something in between the equity and the debt, and on the future flow of assets that will be generated, the natural assets that will be generated in the project. This is key also for entry. So you do also need some financial skills on this big something here. That we do see each time more and more developers becoming more sophisticated and partner with the organization to complement their skills.
Thank you so much. I think that was a very discussion, very deep discussion, and it had a very good technical level, and so we managed to cover many aspects today. And by the way, this is exactly what every city in our solution does. Like today, we're convening wonderful speakers from every part of the equation. This is what we're trying to digitize within our solutions, and help project developers provide the structured data and the story that investors need, while also making the investors' life easier. So with this, I want to thank all the speakers and maybe open the floor to a couple of questions, because we started a little bit late due to the technical issues. So we will have some time for questions. And let me open the floor, please. Please start with introducing yourself. Thank you.
It's Larry Moffat from West Africa, Europe. Marco mentioned the challenge of evaluating the co-benefits, and Laya, you explained that it can be measured. So I suppose with the proper sensors, you can measure improvement in soil quality or water levels. Biodiversity may be difficult, right? How you then evaluate that in dollars and cents. And I'm thinking in terms of blended finance, would it work where the private investors would get their return from the carbon credits, which are usually monetized, and the public would be willing to invest in the less tangible benefits.
Before answering, I forgot something. We launched on Friday with Itaú a portal that is free and open of the entire review. And you have here a lot of information on vendors, and nature data, roads, hydropower, city, deforestation, you name it, renewable potential. It's open, it's Brazil2C.com. And there's a lot of prioritization information for investment here. When you say monetizing benefits, you need to actually be very specific, because some for benefits will be the reputation, some for benefits for the revenue diversification. The biocredit is a whole, the biodiversity credit is a whole open question, and it's not so difficult to answer. And every country will have its own instrument. I'm sure you will know everything about it here, but the important thing is that the benefits are well classified, and that you're able to tackle all of these verticals and show everything. Sometimes we find that it's actually showing how you and women are involved in this community work. This is also a benefit that you can monetize, but it's not directly a biocredit for you. But it's important to align the strategy very well, because I'm sure that Andrea and other people will be very interested in that. I can give the perspective from the investors, but I'm sure my colleagues in the main growth project, he also shows very well this type of investment. So I will be very brief so they can complement. But in his slide, you remember he said, first part you can have philanthropic capital, for example. So there is also the different types of philanthropic, the different types of capital that you can have in different phases of the project. And when looking from a fund perspective, let's say there has already been some development capital, some philanthropic capital that made the project exist, and then enter the commercial investors as we do. And here on our fund, as the funds we manage, we do have investors, development investors. We do have a development agency that entered first with the first loss or junior tranche, and then we have DXC as guarantee for the fund. Then we have the senior investors, the private investors. And when we do work with the project, we are going to monetize the natural assets or the project will monetize beans, cacao, coffee, banana, and carbon. Carbon is an important tool to de-risk the project. Right now, when we do fund structure, you do combine the assets that are generated by the nature project in order to gain your return and to deliver the return to investors. So I would separate like different types of capital entering in different phases of the project, and also at some point they combine themselves in one with more complex instruments like we do. Yeah, I think that's what I would have to mention as intro, and I will pass the word to my colleague.
Any other questions? I think Domenico wants to have a question or a small intervention.
First of all, thank you very much. Really, as I was saying, the technical level, and maybe my question will be a little bit technical. So, visualizing markets are like posing one big question, that is how to make crediting more attached to the impact. Okay? So, how do you think and how do you envision that could be financial instrument to attach this credit more on the impact, more like good on the environmental side, but also on the social side?
I'd like to take that one if I may. So some of the work that I was doing at Vera and that we're also doing at Evercity is we're digitizing methodologies, which is essentially creating an architecture for the project data that's coming from the field to fit into the data architecture for the methodology. What this is doing is this is allowing for the project data to immediately be analyzed for conformity to the methodology and to the standard that that project is submitting itself to. This allows for the review process for registration and verification to go much more quickly. What's unique about what we're building with Evercity and some of our partners is we're actually able to bundle that project data also with the financial instrument like carbon forwards, and very soon green bonds. We're going to have carbon forward linked green bonds very soon. That project data that continues streaming from the project and going into a decentralized ledger being put on chain. It's also able to influence the coupon rates of the green bonds that we'd be able to issue. So good project performance, better rates. We want to reward good behavior and performance and incentivize that. So it's a way where we're actually docking the project data directly into the financial instruments, and at the same time coming back to some of the comments about financial flow to the communities and ensuring that those communities are receiving the intended impact. We're able to trace the financial flows of the project to show the money that's actually going to the community digital wallets. So these are some of the exciting solutions where we're looking to really link the impact, environmental and social, to the projects. And just a quick touch on the gentleman's comments about, valuing co-benefits. I was reminded of an SDG product that Vera was developing where we were able to basically determine with cook stoves, with more efficient cook stoves, how certain communities had to spend less time cutting down wood and burning wood. They were able to essentially get their cooking up to higher temperatures more efficiently with these better efficient cook stove models. And they were able to quantify using a variety of different sensors how much time was taken for the cooking, how much time, and how that compared to traditional models of cooking without the efficient cook stoves, and then looking at that delta and finding ways to capture that information and have that be part of the project that now gets submitted in the monitoring, reporting, and verification that took place for those projects. As to how you assign a dollar figure to that, that's a bit trickier. I mean, I think it kind of it's the market that kind of decides, but we were seeing premiums of anywhere between like 1 to, I mean, on average, like a couple dollars per credit increase in premiums for those types of projects that could demonstrate this additional performance. Yeah, so I hope that touched on your guys' questions. Yeah.
Very guys. With this, I think we are ready to wrap up. I want to thank once again all the panelists online and offline, and of course our host Miroslav for supporting us. That was a very interesting discussion. I learned a lot of new things, although I'm in this industry since 2011. And I was really impressed by the level of our speakers today. I think we really very well described the current landscape and not only highlighted the challenges, but really gave a lot of interesting solutions and pathways for the industry to go further. And I hope that next talk we're going to meet again and we're going to discuss already the next stage in the progress of what has been made and achieved. So thanks a lot. Wishing you a great talk and a great evening. Thank you.